Some of the country's biggest airlines are warning on profits. Delta, the latest major carrier to cut its guidance yesterday, following similar moves by American, United, Southwest, and Alaska. A surge in fuel and labor costs cutting into profits. And it comes at a time when travel demand has been slowing down. And you know oil prices could keep climbing. So should you stay away from this trade right now, or could it be a good entry point? Let's ask our next guest, Jamie Baker. He is senior airlines analyst at JPMorgan. Last year, he was the first ever analyst inducted into the Institutional Investor Hall of Fame for coverage of airline stocks. Jamie, welcome back.
Good to see you, Kelly. Thanks.
You know, because even though Buffett was in them for a while, then he got out, right? So people still aren't sure if they ever want to get involved here. And maybe the last couple months are a case in point. All the excitement and then now down 20% from the highs. Is this an entry point?
Well, look, we think that it is. Fuel prices have been steadily ascending since July. So I don't think that came as much of a surprise to the market this week. But, you know, if anything, the guides that, we received across the industry this week, it really affirms something that we believed from springtime this year. If you don't cater to the premium passenger, if you don't fly internationally, if you don't have a robust loyalty program, then at the moment you don't really have a seat at the grown-ups table.
I've been telling people, why fly other airlines and put yourself at the risk of major delays, cancellations, and all the rest? As I understand, part of the issue with that has been that the airlines are they have fewer flights scheduled than they used to, so it's harder to rebook you.
Yeah, I think that's a fair point. Load factors have, reclaimed their all-time highs. So in the event of a disruption, it tends to be, difficult to be reaccommodated. I mean, that's an unfortunate reality at the moment. But operationally, I mean, if airlines start setting aside, material number of spare aircraft, just in hopes of, dealing with weather delays, that's only going to have an upward impact, a material upward impact on ticket pricing. So it kind of cuts both ways.
Yeah, you're underweight on JetBlue. You're overweight on a lot of the names we talk about, Delta, United, American, with some significant upside. So is this jet fuel issue just for the third quarter? How much of this is jet fuel? How much is labor?
The labor costs, by and large, are already incorporated in the guides that that we've gotten across the industry. So the move in the last week, the formal revisions to guidance, were largely related to fuel prices. I do think there's some demand weakness at the more elastic end of the demand curve. The consumer that is, feeling some pressure from rising unleaded prices, feeling pressure from student loan repayments. That end of the demand curve is showing some weakness right now. But again, those are the types of passengers that tend to skew more towards the Spirits and the Frontiers of the world than the Americans, Deltas, and Uniteds of the world.
Yeah, so jet fuel being one of these things that takes them down for this quarter, how significant a setback is that for what their profit hopes might have been for this year? And do you expect the prices to stay as high and stay as much of a headwind as they are?
Well, look, if I, was a good oil analyst, I'd be doing something, different for a living. What I can tell you is that the industry, by and large, generally takes 4 to 6 months to sort of recalibrate to sustained higher input costs. And they'll do that through capacity cuts. They'll do that through fare increases. So at this point, we're not seeing anything in the oil market that calls into question what we think the industry can earn in 2024. Clearly, it's a disappointment for the third quarter. For the fourth quarter, we've already been modeling pretty close to where spot fuel prices are right now. So at this point, no major revisions are required. But again, it really comes down to the rate of fuel price change and the persistence of that change and whether these elevated prices, prove to be sustained.